Welcome to the DBIX Talks. We're talking about the world economy, concrete about the world economy, how it has developed in December 2013. And for this, I have Heiko Peters from DB Research with me in the studio. So what does the DBIX indicator, your DB Research world economy indicator, is telling us about the performance of the world economy in December 2013?
The DBIX remained constant in December at a level of slightly below 1, and this implies a growth rate of the world economy between 3.5% and 4%, and this is about the trend growth rate of the world economy.
So it's good signs that it's still on this high level, the DBIX indicator, and what are the reasons for this level?
In December, only the sub-indicator of Germany increased slightly. For the other regions, for the US and China, it fell slightly and it remained constant in Japan. On a whole, the DBIX increased relatively strongly in the course of the last half year, especially driven by a relatively strong recovery in the US, and so the main driver for the better indicator is the US economy in the last half year.
Okay, but Germany, you mentioned it, is also one reason for the good performance in December 2013. Although we have deflation coming up in Europe, that's what some people are saying, that we could have a deflation in Europe this maybe next year. How do you see this?
What we see in the course of the last year was a relatively strong deceleration of inflation. The last value is slightly below 1% for the Eurozone on a whole. But between the member countries of the monetary union, it's a relatively diverse picture, with Germany with a relatively good business cycle situation, and still a difficult situation for the peripheral countries, and for example Greece, though the inflation rates are between inflation rates of lately above 1% in Germany and deflation in, for example, Greece.
So we have really two pictures maybe. Central Europe, Germany, Austria, where we don't have any deflation coming up or any danger. But what do you think? What should maybe, for example, the ECB do to avoid such a situation?
The main reason for the lower price increases are the structural reforms. The structural reforms that have been done in the peripheral countries lower the unit labor costs and the costs, and so prices are coming down. This is the one reason. The other reason is that commodities prices are relatively weak. The last available value is that they're about 5% below the previous year level. And so with these two reasons that are only temporary, we do not see that the ECB has to act at the moment.
We'll go into detail talking about deflation, defining it, in our focus talk. You can find this talk on the internet at www.dw.de/English/Made in Germany, and then look for the DBIX. Thank you very much. Thank you, Mr. Peters.